Netwealth Investments Limited is licensed to provide general advice. Our podcasts are not tailored to any one financial situation and may contain views of our presenters which may not align with Netwealth's. The guests, organisation and Netwealth have an arrangement for their financial products to be available for investment through the Netwealth platforms, and Netwealth may receive fees from the guest. More information about Netwealth can be found on our website, including our financial services guide and disclosure documents. Please seek professional advice before acting.
Hi, I'm Matt Heiner, Joint Managing Director of Netwealth, and welcome to Between Meetings. In this podcast series, I chat to industry professionals and thought leaders on what made their career successful and the opportunities and challenges they see on a wide range of topics as they relate to the delivery of advice and financial services. I hope you enjoy their unique insights. In this episode, I'm joined by Kate Temby, Independent Director of Netwealth and Partner at Affirmative Investment Management. Kate shares what drew her into finance, the early years of her role in New York, and the traits of her favourite leaders. We also explore why she's passionate about ESG and impact investing, and why it's important to understand the various shades of green and what a greenium is. Importantly, she also discusses how she ended up in Samoa on Survivor. As always, I hope you enjoy this episode. Hi Kate, welcome to the show.
Well, thank you for having me.
Now, Kate, you're actually the first time I've had one of the Netwealth directors on the show, and I thought it'd be a fantastic opportunity for the listeners to get to know you, but also to do a bit of a deep dive, not only into your career, but some of the other areas that I know you're very passionate about.
I look forward to having a chat.
So the way that we typically like to start these shows is just to get a little bit of background on yourself. And I'm personally always interested to know, how did you get into financial services, or what was it about the industry that first attracted you?
Matt, my background is pure accounting. So I was one of those 1990 graduates where the job market wasn't too strong, and I looked around me and I could see those that were doing accounting seem to get employed. So I started the good old days in auditing and understanding balance sheets. So I think really that did progress into understanding equity valuations. And I moved into JB Weir as a junior analyst, and then really progressing both engaging with clients about how they create returns and wealth. And I think very early on, I would say that fascination around how you both grow organizations and then finally how you do it so the actual employees are having a good time in doing it. So that combination, I think, was my fascination.
So JB Weir as an investment analyst, and you moved through, you ended up at Goldman Sachs, I think not too long after that?
Yeah, so JB Weir, I was an investment analyst, and then about after 18 months moved to New York with the offer from Craig Drummond, ex-Medibank, to take a role as research analyst. So that's really working and research sales in the New York office. So you're talking to US fund managers about Australian stocks. So it was a very exciting time to be in New York around 2000 to 2005, not only to live in New York, but where really the decoupling, I think, of Australian stocks to the US market, was really identified. So to me, that was a chance to really understand what's driving, a growing market from an Australian perspective. At that stage, then Goldman Sachs bought a portion of JB Weir, and then obviously the history tells us that they bought 100% of JB Weir, and I came back to Australia in more of the asset management focus, really thinking about, well, this is a growth industry in Australia, and it certainly was at that time. 2005, the nascent days of the Future Fund, and now what we see is the large industry funds, and then really focused on how we can build wealth for superannuates, and now more broadly around right across advisors and platforms. So it's been a spans across the whole financial services, but I think at the heart of it is understanding what the client or the investor really needs, and listening to that and to providing transparency is really at the heart of what I'm interested in.
Absolutely. And the time in New York must have been great fun. Was the change of pace a bit of a shock for you initially?
Well, a change of pace for those that have been in research analyst roles in Australia, working and covering global companies, the pace was always a bit odd, because you'd have to be up at strange hours. You might be covering News Corp and they'd have their media release at 10 p.m. at night. So, strangely, while the hours were still long in New York, they were a bit more predictable. And so we started early, actually. We started at 6 o'clock in the morning because we were covering yesterday's news. But in strange life of banking, you're finishing a bit more predictably around 7. So and you only had New York to enjoy. So I really enjoyed the lifestyle, and it was absolutely a highlight, both from a career perspective, but personally, where I married my husband there and I had 2 children. So it's been a pretty big part of our lives.
And how did you go with managing all of that? One of the things that I know about you is you can juggle a lot of things at the same time.
Yeah.
But small children, very busy and demanding job, new husband. How did you balance all of that?
Well, it was a different time. There were not many females on the desk, both in New York or in Australia. I'm very logical, Matt, and I think I am efficient. So I think that is a helpful area, a helpful skill that I've got. But when I was pregnant with my first child, which is now 19 years ago, I came up with the smart idea that, well, why can't I just be at home half the day and work in the morning? Because largely the traffic of our work was in the morning. And notably, technology there was a BlackBerry. So I still look back and I think, how did I do that? But it took some conversations with the leadership back in Sydney to sort of talk about how that would work. I think, again, we've seen and absolutely catapulted with working from home now, but the shift it takes for people to reimagine how you're working and then how you do that at scale is an issue. So we might do it for one person, but can we do it more broadly? So I was just really focused on doing it for one, and I did. I started working in the mornings, and then I'd be home by 1 o'clock, and still contactable, but I would have that regular day at work and also a regular day with the kids. Had a lot of help, really great nannies are on tap there in New York, and really always had thought I can't do everything. I think that was one of my early premises, that I'll just decide what I can do, and maybe it's not the washing and a few other domestics, but I've navigated it and moved in and out of flexible work practices for many years. So it's a delight to see the rest of the world coming along.
Absolutely, because you would have been in many ways flying solo at that time from a flexibility perspective.
Oh, absolutely, and it's still a conundrum. I know we talk at Netwealth about that, around how do you offer flexibility and the boundaries for people, but also that ability that you can still be generating the work, and you can still also have time to build the relationships. So I acknowledge that there are some roles I think that you can do when you're in and out of the office. There are others that you probably need to be in contact with people or your customers more. And so it is a bespoke model. And I think these are the challenges we're now going to be faced with when we come out of COVID and into the new world. And I think we will be better for it. I think employees will have the teams will have a better experience, but it's not going back to anything that we had before. It's finding that new normal. And I think it's very similar to what I've done every sort of year or so. I think your circumstances do change, whether it's with young children or whether it's children that are growing and have challenges, or whether yourself, your health, or your parents. You really do need to sit back and say, okay, how is work fitting into my life, and with the challenges I have around me in that year, and then be able to have those conversations with your manager or your teams. And that's, I suppose, what I've done over my career.
It's a really interesting point. I think that the management and leadership challenges that this new world present are very different. I know this is an area that you spend a lot of time sort of thinking about and practicing. Thinking back on your career, what were who were some of the best leaders that you had, and what made them stand out? And do you think that those leadership traits are going to be important moving forward, or are they going to have to radically change again?
Yeah, I've had some really great people that I've worked for and worked with, I would say, in my career. Two standouts. One is actually the partner. When I was with PricewaterhouseCoopers, I spent 3 years working in Toronto, and I worked with the first female partner of Canadian partnership there. Diana Chand, and she was a standout because she had no mold she was working with. She was outside the mold, and she was brave. She was brash, but gee, her work ethic and what she delivered to clients was outstanding. So I think I sort of was around that okay, fearless, brave leader. The other standout I think is Craig Drummond, because I think he's a human-centered leader. He actually understands different people and is not afraid to bring their strengths forward. And so it's the power of the team, and listening to what they need and building models around that. And I think I would, credit Craig to absolutely, as I've worked through both transitioning to New York and also back to Australia. And then I think more recently, Stephen Fitzgerald, who I actually work with now, is a leader who can think to bring the future. And I can see this a bit in Netwealth, actually, in yourself and also Michael, is really being able to see system change. And that takes another level of insight, but also how you bring people along. Because it's great to have a vision. Those visionary leaders like Stephen, they can be too far ahead sometimes, but it's how do you really bring everyone along? And it's a lot of work. So different traits, I think, have stood out at different times.
Bringing people along is a really interesting one. As you say, you can have great ideas, but if no one else believes in them or is going to follow them, they're wasted ideas. What are some of the things that Stephen does almost either on an ongoing basis or systematically to make sure that the team is engaged and following?
I think there are some programmatic, daily occurrences, and this is my role at Affirmative Investment Management, where we're a small team. We're effectively 5 years in, startup, as they say, within the asset management area, and we focus on just managing impact bond portfolios, global portfolios that have an environmental or social impact with a mainstream returns. So Stephen founded that business, and I think very early on he was about collaboration. So he both builds individual relationships with the team, and when you've got 22 people, you can do that, acknowledging that when you get larger, it's harder, but also bringing the network of teams together. So it's that balance between a flat structure but communication. And one example of that was when we went working from home from London and globally, Japan and Australia, is we had daily meetings on Zoom, and it all of a sudden brought everyone together. Now, the frequency and cadence of that doesn't need to be as much anymore, but that really allowed the flow of information when we knew we weren't in person. I think, secondly, Stephen is very good at bringing the outside world into an organisation. So he has variety of interests, and I'm sure that's why he's supportive of me having a portfolio, albeit AIM is my main full-time role, is that you learn a lot from other industries, other people, other experiences, and he openly talks about that. So I think that openness allows for innovation, for others to do the same. And in that leadership, it really does foster, I think, innovation.
I think they're all really good points. And you mentioned before, Stephen, a bit of a visionary and seeing where the ball's bouncing. Affirmative, which, as we touched on before, is actually your day job, your full-time job. Clearly saw the writing on the wall, and that impact and ESG was going to be a big thematic. An area that you're very passionate about and actually operating again across both ESG and impact. Do you want to just talk a bit more about Affirmative and what a green bond is? Because I think it's probably still a relatively foreign concept to many.
Yeah. And also where my interest came with Affirmative, my kids would say I'm really bad at recycling. And I know I am. But when I left Goldman Sachs 2017, I could see sitting back, there was a mega trend about to happen. And that was this movement of capital towards transition and really trying to solve the global climate bond crisis. And we've seen where we are now. It's really an exciting time, particularly going into COP 26 in the next couple of weeks, and so many corporates as well as governments moving to net zero transition. But what I could identify is that when you see that absolute move in financial services, we often lose transparency and authenticity. So one thing that I'm very passionate about is telling a truthful story. Taking the complex into the simple. And so I could see that there was a role to play both in doing that, and if I could help raise capital that could help finance this transition, then that would be a great way of spending, the next 10 years of my career. So which way do you go? Where do you sit? And you come to green bonds. And green bonds are just like any other vanilla bond. So it's a global listed bond that it pays a coupon, but the difference is its use of proceeds. So it's particularly used to finance environmental or social projects. So why I liked it is it's very transparent. There is a very clean line between the investor and what it's the purpose it's going to do. Unlike ESG, and we could have a whole podcast about that, Matt, around what ESG gives us or it doesn't. The idea that you could really see at a project level what your capital is being used for. Now, you need some verification and you need to assure that that is actually the story that is being told is actually happening and the impact and be measurable. But I really like the clarity from a bond investor's perspective.
And should you expect a less or a greater yield on these bonds, or are they very similar to what you would expect from any corporate?
So it's a very common question, and you see the topic of greenium. You love these new markets. There's all these new names, and a greenium is really saying exactly that, Matt. Is there a premium? Do I expect a lower yield for financing? There is really no evidence of a persistent greenium. Any survey out there will use certain issuances, but it's more a supply and demand and a liquidity challenge. So I think the point being is at any time in our market, some bonds pay higher yield or lower yield. So you not only need to find those that are true and authentic, you need to find managers who are managing a portfolio for financial returns. And so interestingly, at Affirmative, we build our universe of what we think meets our criteria, and then it's separately up to the PMs to use that universe and deliver financial returns. So if there is a premium at some point, you don't pay overs. And we all know this is, and there's plenty of conversation now in the press and financial service commentary around the flight of money. We all know what happens in a market when there's increased demand and not as much supply. We know that prices will be paid over. So it's ensuring more than ever that there's a discipline around your portfolio construction in this space.
Before we bring you the second part of this chat, a little bit about who we are. Celebrating over 20 years, Netwealth is an ASX-listed company that has been rated number 1 for overall user satisfaction by Investment Trends for 8 consecutive years in their Planner Technology Report. As the financial advice landscape changes, it's important to embrace new technology to enhance the way you run your business. With change comes your chance to innovate, explore new perspectives, and realize new efficiencies. Netwealth is here to support you on this journey by providing you market-leading technology, excellent customer support, and expertise to help your business thrive. Contact us today or visit the Netwealth website to learn more and get the PDS, which should be read before making a decision to purchase a Netwealth product. Products issued by Netwealth Investments Limited.
And I think what's interesting about the green bonds is that the bond issuance doesn't necessarily have to be at the company level. It can be at a project level. So a global mining company that produces coal, for example, could actually issue a green bond for a environmental project. Is that right?
Absolutely. And, this is where we come into the world of transition. Because green bonds, you're absolutely right, is use of proceeds. At Affirmative, we look at the behaviours of the issuer, the responsible issuer and the issuance. Those two criteria are very important to us, as well as good old-fashioned credit work, like any fixed income manager. But I would say that there are some tolerances. So if you have a company that says it's going to become renewable, issue a green bond, and it looks like it's into all the right projects. However, 6 months later, we see that they've invested in the new coal mine. Well, that would not meet our criteria. So there is absolutely a subjective nature to this. But it's consistency and what technology and what expertise do you have to apply that. The second part to your question is around transition finance. And really, the world we're thinking about is actually beyond use of proceeds. So we are going to have just general purpose bonds now issued that's going to help fund the transition. We know that over 50% of governments as well as corporates now have set net zero targets. So for them to get to their net zero target, they need financing to do that. So I think this is going to be actually a bigger piece of the market, Matt, in the next coming 5 years, is transition finance around that. And how do you verify that that is happening?
So the auditors must be loving this.
Yes. So verification. And then if you're verified, you need someone else to verify your work. But what we can do is we can rely a little bit on some standards. The work of TCFD and all these other task force disclosure, and there are a lot of working groups that are coming forth with standards. And what we can see is there is a bit more of a synthesis. As we see in the early stages, there's often a proliferation and there's too many standards. But I think the market is evolving where it needs to land on a few key areas. And for investors, that's not only with the issuance, but that's also with the asset managers. And the SFDR, another nice acronym for you, the Standards of Financial Disclosure, they have issued in the EU requirements around funds, around different levels of ratings. They call them Article 9 or Article 8 or Article 6. Sorry, I don't know where 7 went. But that is legally binding in regards to your prospectus. If you say you have an impact, you need to evidence that. Now, at the moment, it's self-certified, but that will shift as well. So I actually see it's positive that we've got some standards coming out because it does help. At the end of the day, it's the investor who needs to have some confidence of the reporting, the asset management behaviour, and then the quality of what's being delivered.
And I think that's a really good point, and something that we've talked about a little bit around just the data that is available when it comes to ESG or impact investing. It's very difficult for investors and particularly for financial advisors to try and work out what is actually happening under the hood. And we've heard about greenwashing and given that it is such an important thematic and one that we've ended up talking about quite a lot on this podcast series. As far as maturity of the industry goes and the data and the research that sits around it, where on the journey do you think we are?
Well, I can give you 2 examples. I think that we're on a journey, absolutely, and I think we're not even halfway there. I actually think we've got some ways to go, which is really hard for the investor when those crediting agencies, whether it's the Morningstar, Zeniths, the RIA, globally S&P, they're normally where we look to, and they've got established processes. They're now establishing their ESG or their impact analysis. But the good news is that I can see in the last 18 months, the quality of expertise within those organizations has increased. Secondly, the quality of questioning has increased. So we are many conversations around digging deep in what we do, but that's good news, because if they're digging deep, it means we're going to work out the quality and the not so good quality. But I think those frameworks are still being delivered. The other piece is the data. I'll give you a good example. So S&P provide some reporting against green bonds. So some of the criteria, and one of the hallmark that we report on at Affirmative is our annual impact report, where we measure across each portfolio at a project level. We might have 100 frameworks in a portfolio. That would be over 2,000 projects. It's a huge amount of data, as you imagine, and we recalculate some of the data so it's consistent. We saw the S&P on their data would only get 50% coverage of that sort of portfolio. So that's not enough for us. We need 90 to 100% to show that was the impact. So, but close your eyes, Matt, that's commoditized in 3 years' time. So that is going to get there. So then you sit back and say, well, what actually differentiates managers? And it's going to be their expertise, as it is in any other piece of the market. We don't now say to a portfolio manager, oh, how did you get your financial statements of your company? Well, that's all automated now. But we do say, what's your skill in understanding that industry and seeing the value proposition in your portfolio construction. So that's where I think it's going, but we are on that journey.
And the addressable universe for managers is going to explode over the next couple of years. I think there was in the recent reporting season, nearly all of the top 300 companies put out some sort of a CSR report. So where an ethical manager and ESG manager previously would have been quite constrained about who they could invest into, presumably the market starts to look more like the market again.
Well, this is the perennial question. Is it a specialized area of investment, or is it just mainstream? Is it now that the investors are expecting these are the practices? And, they're just reading a number of articles, the FT's, Financial Times in the UK, is very good at profiling this, but the two sides of it. Is there additional value in investing in ESG? Well, I'm not sure. Is that the question? Or is it that there is a standard that we require of our companies, and then the additional value is how they execute against their strategy and the opportunity? I think we're all evolving to it's mainstream.
Definitely, which is a great outcome for obviously for the clients and the companies that they support. Kate, whilst we've got you, we might as well to still explore the various colours of green. Impact investing, different to what you're doing at Affirmative. You're on the investment committee of Conscious Investment Management in Melbourne. How does what you're doing at Conscious differ to ESG investing or what you're doing at Affirmative?
Yeah. So, and I was part of a great panel session I think Netwealth hosted recently, where we talked about the spectrum of responsible investment. And I think it's interesting that we still see that there's different silos. So the initial silo is one of exclusions. So I can get a portfolio that I want initially, but if I exclude all these bad things, then that will help me build something that I feel good about. Well, I think the jury's now come in on that well, exclusions don't really help me influence companies and the shift. So I then move on from that and I say, okay, well, I just need ESG. Give me some good behaviors, and I'll be great. Well, I think the jury's out on that one, because we've just said ESG needs to actually not be a silo. It's actually a banner that everyone needs to do. So therefore, where do I get to around my positive impact? And so then it's discussing, okay, do I want a portfolio that has a positive impact in a listed market, an environmental or social, and that's sort of an affirmative at a large scale? Or do I want a positive impact on a domestic market in Australia? And that would be more of a conscious. So conscious investment management focuses on investing in coming together with not-for-profits and helping finance property developments and solar developments, really to roll out a positive environmental or social impact on the ground in Australia. You may have seen the AFR, it's very timely today, just announcing their partnership with Housing First in Victoria to roll out quite a number of social housing within Australia. So that's partnering both with the government and partnering with the not-for-profit, and then obviously the financing from a conscious investment perspective. Now, importantly, all the parallels there are one for financing, but the impact, and is it measurable? And can you really take care of your customers, that impact? And I think that is on the ground very important when you're talking about social impact. It is true in environmental as well, but really, how are we looking after those that are moving into social disability housing or moving into social housing? That longevity, and I think that model of partnering with a not-for-profit is a really important criteria in that regard.
It's still a very niche area, although we are seeing more and more funds launch, almost on a weekly, monthly basis at the moment. Many of them, and certainly the ones I've looked at recently, seem to be for wholesale, sophisticated investors only, ignoring institutional. Is it because the underlying assets or the constructs are more complex, or is this something that could be available to retail investors in the future?
Yeah, and I think it's an interesting question. I think one is around both supply. So is there the supply and the models out there that you can actually put money to work? And I think Conscious and many others in social disability housing is showing that actually you can, if you get the model right. the model that Conscious has developed, I think, is actually, and we're showing it in social housing recently, but in other sectors, will be able to be rolled out. So we'll be able to get the scale in the first instance. Secondly, and I'm an old-fashioned investor, so I like portfolio construction, Matt. So it's, you're not a one-trick pony that you found a good renewable asset and that's who you are. What are you offering to your investors? And that requires discipline in regards to that portfolio construction. So then the next piece is, how do you package it up for that investor? Is it via a platform? Or we are seeing many, whether it's super funds such as Future Super and Australian Ethical, far more available to express that on a more frequent basis. Almost recently, you may have seen in the press last week, is Bloom. I hadn't heard of them before. They're a new startup that is investing from a micro investing into this area. Now, I have to get my mind around how you micro invest into large. I don't know enough about the back end, but what I'm saying is it is moving, Matt. But I think investors can't lose sight of, it doesn't matter what marketing you put around any of this, you can't lose sight of there has to be a quality investor team behind it for it to really be valuable, regardless of how you access it.
Absolutely. And I think it's moved on. People not only want to deploy capital and do the right thing and do good, but they also expect a return these days.
Yeah. And I think the evidence is there that you can do both.
Kate, we're unfortunately going to run out of time shortly, but it would be remiss of me not to raise the next topic with you, which is no doubt the favourite one that everyone loves to talk to you about. How did you end up on Survivor?
So there's nothing like having a bit of a career break and thinking, what will I do? Well, I thought I would just sort of read a few good books, but my kids thought that coincided nicely by submitting an application to be on Survivor. As I mentioned, we lived in New York, so my husband and I were quite, for many years been the US version of Survivor fans. But I'm not a number one, Survivor diehard, but I am about giving the opportunity to tell your story, and I thought it would be great exercise for my kids to do a pitch. Love a pitch, and so they did an excellent pitch of me, both from a video and a written perspective. And their pitch was so good, I got interviewed and I made it through the cut. So of course, when we're at the stage of like, well, I think might be going to some bizarre island for who knows how long, I said to my family, well, come on, I think we've achieved what we wanted to achieve here. And they're like, of course you're going. So nothing like raising to the challenge and getting physically fit. And there I was. And it was an amazing experience, Matt, I think also the isolation. COVID is not dissimilar in some ways, but lockdown and isolation was pretty unique back in 2017, as well as coming together with a very broad range of people. And then the physical and the mental of, being in rainy Samoa, and, then dealing with the luck or the skill, whatever it is on Survivor, being booted, and working through that. So it was an amazing experience.
How far did you make it through?
I was third boot. So
they obviously saw you as a threat, did they?
Oh, of course, Matt, of course.
And just out of interest, did you go in there with a strategy? Because there's obviously a lot of people that have spent a lot of time studying Survivor and the way to win. Did you go in there with a bit of a strategy, or had you put a lot of thought into it by yourself or with the kids?
I had gone into a strategy. One strategy was that because I was on the older side of it, Matt, I needed to be physically fit. So I did have that strategy, that I just needed that endurance. The other thing, I think I thought that you could build personal relationships, and I would work to be lower, unseen. That was sort of my strategy. But I forgot I was just an older woman. So I just stood out in who I was. So that was probably a flaw in reflection to my strategy. And then it is about building those relationships. So that was my aim. It went okay until my alliance decided that
it dissolved. And what was the worst challenge you had to do on whilst on Samoa? You didn't have to eat bugs or anything, did you?
Well, no, because they don't. It's not like Celebrity Survivor. It is about endurance. I think the most memorable one is when you're standing on top of a 5 meter, like the challenges are large, a sort of a 3 meter ball with a rope above your head, and you've got to go about 5 meters pulling yourself, standing on the ball. So some of them are quite scary. You do it, and then I had a ring that I had to throw over to toss over like a quoits ring. And one thing that I would say in training, my husband and son were very keen to teach me how to throw. Apparently I didn't know how to throw that, but I trained for that and it worked. I was able to do it. And so that was, both scary, but also pretty exciting when you think, well, I pulled that off.
And would you recommend it to other people?
I would. I think it's I always recommend things that take you out of your comfort zone. Two things that do that, I think, is learning, and that whole fascination of just searching for new things to learn, and then the physical. And I think Survivor did both of those. It absolutely got me away from 17 years at Goldman Sachs.
So much for the career break.
Exactly.
Kate, I think it's going to be pretty hard to top that experience. So thank you so much for coming on the show and providing so much wisdom and experience about ESG impact and the other things that we've talked about. And look forward to catching up soon.
It's great, Matt, and thank you for having me.
Thanks for listening to this episode of Between Meetings. For more episodes and to subscribe to our series, visit the Netwealth website, iTunes, Spotify, or your favourite listening service. And if you want to contact me or engage or discuss any of the topics raised, please find me on LinkedIn or Twitter or send me a private message. We hope you can tune into the next episode.